How much down payment is needed for a car? If you're in the market for buying a new or used car, you may wonder how much of a down payment will be required these days. Is there a minimum? Will more money down get you a better deal? And just how much will your down payment affect your monthly payments? How much you are willing and able to afford as a down payment on a new car is pretty much up to each buyer. But there are some things you should know about car down payments before you head to a dealership and fork one over on a car. How much is the norm? Car purchases typically don't have a minimum requirement like 20% down, although that is a common amount that lenders like to see. Conventional wisdom has typically found that about 20% down is the right amount to help make a dent in the overall amount that you will finance. But in practice, people put down significantly less, around 11 to 12%, much lower than the norm. In fact, an Edmunds analysis in 2019 found most buyers put down only 11.7%. Get a better interest rate with a larger down payment. A substantial down payment of 20% or more will accomplish three things for you. Notes Bryce Wicker, CPA, a owner of CPA Exam Guy. A study guide comparison tool for certified public accountants. Number 1. You will reduce your monthly payment because you will finance less money. You will typically get a better interest rate because, again, you are financing less, so the lender is taking less risk on you. Number 3. It will offset the initial depreciation hit you take as a drive your new car off the lot. For example, if you're trying to score a deal like 0% financing, typically only offered to those with excellent credit scores, then you may be able to make a larger down payment to help you qualify for the 0% deal if you couldn't qualify without it. The greater the borrower's participation by putting more money down, the less risk there is for the lender. And with the lower risk come lower rates. Get approved more easily. Likewise, if you are a risky borrower with a lower credit score, then you may land a better rate if you pay a larger down payment. So it is possible that you will get approved more easily or be offered a lower interest rate if you are willing to put a bigger payment down upfront. Says Logan Murray, CFP, RICP, EA, a financial planner, and a tax preparer at Pocket Project, a financial management site. A scrupulous lender will still factor your credit scores into the equation, but think of it as the more you put down, the better your chances of getting approved and of qualifying for the best deals. Lower your monthly payments, what's more. Making a larger down payments will also allow you to have smaller monthly payments, since you will finance a smaller principal amounts and pay less interest over the life of the loan, things that make a larger down payment a good bet. Upside down loans. When you drive your new car off the lot, the depreciation timer starts ticking. The more you owe on the car, the worse it keeps up with its depreciation value. The bottom line is that if you put a small amount down, you may end up with negative equity in your vehicle, meaning you will owe more money than it's actually worth over time. So investing more upfront definitely does help you avoid being upside down on your loan, says Welker.